What if Bitcoin doesn't just survive the next bull run, but hits $250,000 and shocks the entire world? Yeah, wild prediction, right? Well, that's exactly what Cardano founder Charles Hoskinson put on the table. And if anyone's earned the right to toss out bold calls in this space, it is definitely him. Welcome back to JRNY TV, where we untangle the chaos of digital finance and we help you catch the next wave before everyone else does. Today, we are breaking down why Hoskinson believes Bitcoin could absolutely go parabolic by the end of 2025 and why this is not just another moon boy fantasy. Hoskinson's been in the crypto trenches for over a decade. He's seen the bubbles, he's seen the crashes, the comebacks, and through all of that, he still sees Bitcoin as the centerpiece of the next financial revolution, not just as a store of value, but as the backbone of an entirely new system. And while skeptics laugh off a six-figure price target, this is not coming from some YouTuber that's chasing clout. This is one of the space's most respected builders that's laying out what he sees coming. And spoiler alert, it's big. So today, we're diving headfirst into what is fueling this $250,000 price prediction, from Bitcoin's evolving role in global finance and halving cycles to institutions pouring in like never before. There's a lot to unpack. Stick around, because by the end of this breakdown, you might just believe that $250,000 per Bitcoin is more than possible, and you actually may think that it's inevitable. Section 2, Bitcoin's role in the global financial ecosystem. To understand why Charles Hoskinson thinks Bitcoin could blast past $250,000, we've got to zoom out, way out, and look at what Bitcoin actually is to the world right now, because it's no longer just magic internet money. Bitcoin has grown into a macro asset, and it's one that people are now calling digital gold for a reason. With a hard cap of 21 million coins, Bitcoin is not just scarce, it is mathematically guaranteed to stay that way. And that's quite rare in the world of fiat currencies and inflation. Now, Hoskinson's thesis is built around this bigger picture. Bitcoin's becoming more than just a speculative tool. It's a financial anchor. And with central banks around the globe printing money like it's going out of style, folks are looking for a hedge. And Bitcoin, it's becoming that hedge. Big named institutions like BlackRock, Tesla, and MicroStrategy didn't just add Bitcoin to their portfolios for the memes. They did it because they see where the world is headed. And it's not just about inflation protection either. Bitcoin is starting to creep into international settlements, long-term treasury strategies, and even central bank discussions. The rails are being built for Bitcoin to move billions, maybe even trillions across borders, peer-to-peer, no middlemen. And if that trend keeps snowballing, the demand for Bitcoin could explode. And with only a sliver of supply left to go around, well, Hoskinson's $250,000 target might end up looking conservative. Section 3, the impact of Bitcoin scarcity and halving. All right, so if you've been in the crypto game for more than a week, you've probably heard that word called halving tossed around quite a bit like it's some magical event, and honestly, it kind of is. You see, Bitcoin runs on a fixed supply model. Only 21 million coins will ever exist, and unlike fiat currency, no one can just decide to print more. It's built into the code, and here's the kicker. Every 4 years, the number of new Bitcoins that miners receive gets cut in half. That's the halving. And every time it happens, the market goes a little crazy. Now, pair that with Bitcoin scarcity, and you've got a classic supply shock. Demand goes up, supply dries up, and price, you already know it launches like a rocket. It's happened before. Every major bull run in Bitcoin history came right after a halving. 2012, 2016, 2020, 2024, boom, 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 and guess what? Boom. The next one's right around the corner, okay? Hoskinson's saying that $250,000, it's kind of riding on this wave. And if history even kind of repeats itself, he might be onto something huge. And here's the part that most people forget. We're already at 19 million Bitcoin mined. That means we're down to the last 10%, and most of that won't hit the market for decades. Meanwhile, demand from institutions, countries, and everyday investors continues to climb. And Hoskinson knows this, and he sees the halving not just as a bullish event, but as the ignition switch for Bitcoin's next giant leap. And if you're sitting on the sidelines when it hits, well, you might miss the rocket. Section 4, the institutional adoption of Bitcoin and its role in the price surge. Now let's talk big money, because this is where things get real. Institutions used to laugh at Bitcoin. Not anymore. Now they're buying billions of dollars of it. And it's no longer just retail investors, it's hedge funds, it's public companies, and even traditional financial institutions that are all getting involved. We're loving it. Take MicroStrategy, for example. As of March 2025, they've accumulated a staggering 528,185 Bitcoin. That's right. They purchased it for approximately $35 billion. With Bitcoin trading around $82,000, that means their holdings are valued at a little over $43 billion. This aggressive accumulation underscores their belief in Bitcoin's long-term potential. Tesla, another major player, holds 11,509 Bitcoins as of early 2025, valued at approximately $1.2 billion. Despite market volatility, Tesla's commitment to Bitcoin remains stronger than ever, reflecting its role as a strategic asset in their portfolio. The institutional adoption has opened the door for more traditional investors to enter the market, creating increased demand for Bitcoin. Institutional investors, they tend to have larger amounts of capital to invest, forecast. And as more large-scale institutions adopt Bitcoin as part of their portfolios, this could drive prices up even higher. Additionally, the approval of Bitcoin-based exchange-traded funds, ETFs, would further enhance accessibility, allowing traditional investors to gain exposure to Bitcoin without needing to directly purchase or store the cryptocurrency. Charles Hoskinson's $250,000 price prediction is banking on exactly this. The moment Bitcoin becomes a normalized asset across Wall Street portfolios, endowments, and global funds, that is exactly when supply gets squeezed, demand explodes, and price goes parabolic. Institutions don't just bring capital, they bring legitimacy. And when legitimacy hits full stride, $250,000 won't sound crazy at all. It might start sounding cheap. Section 5, the future outlook for Bitcoin's price. Could $250,000 become a reality? So, could Bitcoin really hit $250,000? It does sound a little wild until you start adding up all the pieces. We've got supply shrinking from halving events, demand rising from both retail and institutional investors, and a global financial system that looks shakier by the day. The stars aren't just aligning, they're practically drawing arrows toward that price point. Charles Hoskinson's prediction might have raised some eyebrows, but when you look at the fundamentals, it doesn't sound that far-fetched. We're talking about an asset with a fixed supply of 21 million coins, most of which are already in circulation. And you add in trillions of dollars of institutional capital that hasn't even fully arrived yet, and that creates a setup that we've honestly never even seen before in the market, ever. And if regulatory clarity improves, Bitcoin ETFs keep gaining traction, and global economic uncertainty continues to fuel digital asset interest, yeah, $250,000 per coin could just be the beginning. What does it mean for you? Well, whether you're holding a full Bitcoin or just stacking sats, this next cycle could be one for the history books. And don't let the noise or the short-term fear blind you from the bigger picture. Hoskinson's forecast isn't just hype, it is a roadmap for what could be the most explosive crypto run we have seen yet. So buckle up, stay sharp, and do remember, sometimes the craziest predictions are the ones that end up being spot on. If you found today's video valuable, please be sure to hit that like button, subscribe, and smash that notification bell so you never miss our next video. And as always, do remember that the future belongs to those who start preparing for it today. Thanks again for watching JRNY TV. We will see you in the next one.